Welcome, everyone, to a brand new deep dive. Today, we're looking closely at Nordson Corporation, ticker NDSN.
NDSN, right.
We're focusing on their recent fiscal year 2025 third quarter earnings call.
Yeah, it just came out.
Our mission here is really to pull out the most important insights, the key takeaways from this update, give you a shortcut to understanding what's happening with this key player in industrial and medical tech.
Exactly. Nordson's calls, they're always a pretty good window into, diversified industrial markets, aren't they?
For sure.
And this one's definitely no exception. We'll hit the headline numbers, then dig into the operations a bit.
And what it means strategically.
Right. What it means for them and maybe the wider market, too.
Okay, let's unpack these Q3 results then. Nordson put up a strong quarter.
They really did.
Comfortably beat the analyst estimates, both revenue and earnings.
Yep. The numbers tell that story pretty clearly. Adjusted EPS was $2.73.
Okay.
Consensus was looking for $2.63. So a nice beat there.
And revenue.
Revenue hit $742 million. The street was at $717 million. So beat there too.
And that's solid year-over-year growth we're talking about.
Absolutely. Sales up 12% compared to last year.
Yeah.
And adjusted EPS, that's earnings per share, sort of adjusted for one-off things, that climbed 13%. Impressive growth.
What really caught my eye, though, was the cash flow.
Oh, yeah.
A record $226 million in free cash flow. They mentioned a 180% conversion rate on net income.
Wow, 180%. That's turning profit into cash very efficiently.
Extremely. Plus, the balance sheet looks stronger. Net leverage improved to 2.2 times.
Down from 2.5.
Exactly. Which, indicates better financial health, more flexibility, less risk.
And the market liked it. Initially, at least.
Yeah. Saw that pre-market pop nearly 6%.
Right. Tells you the immediate reaction, though it did settle back a bit.
It did. Finished the day up 3%. Still a solid reception overall, I'd say.
Agreed. Solid numbers, solid reaction. But the details are where it gets interesting.
So yeah, let's dive deeper. Those top-line numbers are strong, but what's driving it? What's happening in the different business segments?
Well, it's a bit of a mixed picture across the segments, but overall pretty resilient. Let's start with IPS Industrial Precision Solutions.
Okay, IPS.
They brought in $351 million in revenue. Now, organic sales, taking out currency effects and acquisitions, they were down slightly, about 2%.
Okay.
But they got a 3% boost from favorable foreign exchange. So net-net, slightly up on reported basis.
And within IPS, what's working, what's not?
They saw growth in precision agriculture. That's tech for farming. And also in non-woven systems. Think like materials for diapers, masks.
Right.
But continued weakness in polymer processing.
Plastics machinery.
Exactly. And also cold material lines for automotive.
Yeah.
But interestingly, management said they think polymer processing has hit its trough.
Troughing. So maybe the worst is behind them there.
That seems to be the hope or the signal, yeah. And a key thing for IPA, its host speaker, is the recurring revenue.
The aftermarket parts.
Precisely. About half their revenue there is aftermarket parts, consumables. That really helps smooth things out when the big system sales slow down. It's a nice cushion.
That makes sense. Okay, switching gears. Medical Fluid Solutions, MFS. How did that segment look?
MFS was quite strong, a big jump. Revenue up 32% to $219 million.
32%? Wow. What drove that?
Mostly the Atrium acquisition. That added about $52 million in revenue.
Okay, so acquisition-driven mostly.
It accounted for 31 points of that 32% growth, yeah. But even if you exclude the part they're selling, the medical contract manufacturing business.
Right, the part held for sale.
Even excluding that, organic sales in MFS were still up 4%. So some underlying growth, too.
And the interventional business, they mentioned destocking there before.
Yeah, that showed sequential improvement. It was about flat compared to last year. And the key phrase was destocking trends normalized.
Meaning customers have worked through their excess inventory? Seems like it. They're getting back to more normal ordering patterns, which is a positive sign for that business heading into, potentially fiscal 26.
Got it. Okay. And then the third segment, Advanced Technology Solutions, ATS. Sounds like this was the standout.
It really was. ATS delivered $171 million in sales. And get this, 15% organic growth.
15%? That's huge.
And it's their second quarter in a row of double-digit organic growth. So real momentum there.
What's fueling that fire?
It's coming from a few areas. Double-digit growth in electronics dispense, optical sensors, measurement and control systems.
Oh.
A lot of that strength is linked to demand in Asia-Pacific and critically AI, specifically AI-driven advanced packaging applications.
The AI chip packaging. That makes sense. Huge trend right now.
Absolutely.
Yeah.
It's about putting those powerful chips together for AI demands. Now, they did see some weakness in X-ray inspection systems, which offset things a bit.
Okay.
But overall, ATS is clearly benefiting from some major secular tailwinds, especially AI. So beyond the segment numbers, management kept talking about operational excellence.
They did.
And they really highlighted the Atrium acquisition success.
Yeah, and understandably so. Atrium is exceeding their expectations. It's actually become EPS accretive. So adding to earnings per share a full year ahead of schedule.
A year early, that's impressive integration.
It really is. Shows their MBS Next system, their business improvement framework, is working well. And they're not done with portfolio moves.
Right, the divestiture.
The sale of the medical contract manufacturing business, that CDMO, that's expected to close this quarter, Q4.
And the idea there is to focus more on their own higher margin medical parts.
Exactly. Sharpening the focus on proprietary higher margin medical components.
Yeah.
It fits the strategy.
And it's not just buying and selling, right? They mentioned innovation too.
Absolutely. They're still investing in R&D. They highlighted some incremental innovations like updates to their Spectrum S2 electronics dispense platform. Also, a new global platform for powder coating controls and something called the PharmaLock Zero clamp for biopharma uses.
So reinforcing those niche positions.
Precisely. Plus, they're doing some targeted restructuring in the weaker parts of the business. They expect that to save over $15 million a year by 2026.
So managing costs where demand is soft, innovating where it's strong, sounds prudent.
Yeah, it shows they're actively managing the portfolio for efficiency and profitability.
Okay, let's talk capital allocation. They generated a lot of cash. How are they putting it to work?
They seem very disciplined, very balanced. This quarter, they paid down over $100 million in net debt.
Good deleveraging.
Definitely. They also bought back over $70 million of their own stock in Q3.
Okay.
That brings the total buybacks this year to around $212 million. Plus, they paid out $44 million in dividends.
So returning cash to shareholders is clearly a priority.
It is. And speaking of buybacks, the board just approved a new $500 million share repurchase authorization.
Another $500 million. That's significant.
It is. Brings their total remaining authorization up to about $800 million. But management was quick to point out.
Not giving up on M&A.
Exactly. They said this doesn't signal a shift away from deals. The M&A pipeline is apparently still healthy, but they're going to remain disciplined on valuation and strategic fit.
Makes sense. Keep options open, but don't overpay. All right, looking ahead then. What's the updated outlook for the full fiscal year? Any changes to guidance?
Interestingly, the actual ranges for the full year remain unchanged. Sales still guided between $2.75 billion and $2.87 billion.
Okay.
Adjusted EPS between $9.70 and $10.50, still the same ranges.
But any change in tone? Where they expect to land within those ranges?
Yes, slight shift there. After the strong Q3, they now expect sales to track slightly below the midpoint, which is actually an improvement from before when they said the low end.
Okay, so slightly better feel on sales than before.
Right. And for adjusted EPS, they now expect to track slightly above the midpoint, so maybe leaning a bit more towards profitability improvements. And the backlog. Any concerns there? Sequentially, the backlog was down about 5% after Q3's strong shipments. But management called the overall order patterns stable.
Stable. So maybe just timing.
That's how they framed it, yeah. More about timing of shipments than a drop-off in underlying demand.
What about the bigger picture? The market environment, geopolitics, trade. How are they navigating all that uncertainty?
They definitely acknowledged it's a dynamic environment, lots of uncertainty out there.
Hard to ignore.
But what's compelling is how they seem positioned for some key long-term trends despite the noise. ATS and that AI packaging demand is the big one.
Right, the multi-year cycle they mentioned.
Exactly. They see that as just starting, even if demand is a bit lumpy sometimes. And while polymer processing is weak, that troughing signal is important.
Potential bottom there.
And the supply chains normalizing in the interventional medical business sets them up for, hopefully, a return to more normal growth in fiscal 26.
So diversification helps them ride out storms in one area while catching winds in another.
That seems to be the strategy, and it's working reasonably well, allowing them to deliver solid results despite the mixed signals.
It really is quite impressive. So looking forward, what are the key things, the catalysts maybe, that we should be watching for?
Okay, near-term catalysts. First, the successful closing of that CDMO divestiture in Q4. That should happen soon?
Streamlining the medical focus.
Right. Second, keep an eye on orders in the ATS segment, especially anything clearly linked to AI packaging. That's the growth engine right now.
See if that momentum continues.
Third, watch the pace of the new share buyback program. How quickly do they deploy that $800 million authorization?
Okay.
And finally, look for real signs of recovery in those more economically sensitive IPS markets. Are they truly bottoming out and starting to turn?
Those are good things to track. It sounds like they're focused on executing through the end of this year and setting up for 2026.
Absolutely. They reiterated those long-term targets. 6-8% revenue CAGR, 10-12% adjusted EPS growth. Ambitious, but that's the goal.
Okay, now for our favorite segment. This is not financial advice. Just a reminder to everyone listening, this is purely for entertainment, for conceptual exploration.
Please don't run out and do these trades.
Definitely consult a qualified financial advisor, do your own homework. This is just us thinking out loud, maybe a bit unconventionally.
Exactly. Let's play a little what if.
All right, hit us with trade idea number 1, the dividend fortress play.
Okay, so you look at Nordson's record free cash flow, right? And this big new $500 million buyback authorization. Plus, management keeps emphasizing discipline. So the idea is go long the stock, but use a collar strategy.
Long stock plus a collar. Explain the collar again.
You buy the stock. Then you sell an out-of-the-money call option against it. That brings in some cash, some premium.
Right, capping your upside a bit, but generating income.
Exactly. Then you use some of that premium you collected to buy an out-of-the-money put option. That protects your downside.
Okay, so limited upside, limited downside, potential income.
Correct. Now, the outrageous part here isn't the color itself, it's why you're doing it. You're basically betting on Nordson's financial strength, their cash flow, their buybacks, their discipline, to create a kind of higher floor under the stock price.
Ah, betting on the financial engineering almost.
Kind of. You're saying their cash generation and capital return will support the stock, letting the organic growth story slowly play out while you're hedged against macro shocks. It's leveraging their fortress balance sheet.
Interesting. Betting on management discipline and cash flow as a support mechanism.
Ooh.
Okay, what's the second wild yet plausible idea?
This one's called the hidden gem spin-off speculation.
Ooh, intriguing.
We just talked about the CDMO divestiture, right? Focusing on higher margin medical.
Yeah.
So the what if is, what if Nordson, feeling good about the Atrium deal and the CDMO sale, decides to optimize the portfolio further? What if they identify another, maybe larger segment that's not quite core or has lower margins and spin it off?
Spin off another piece.
Yeah.
To unlock value.
Exactly. The idea is the market might value two separate, more focused companies higher than the current combined one. So how might you play this pure speculation? Maybe a long straddle. Buy both a call option and a put option with the same strike price and expiration date.
Betting on a volatility.
You're betting on a big move up or down, likely around some future strategic announcement. The outrageous part is you have no idea which segment or when this might ever happen, if at all.
Pure speculation.
Pure speculation. But the plausible part is that this management team is actively optimizing the portfolio. It's a lever they're clearly willing to pull. And you could argue maybe, just maybe, the IPS segment, with its mixed results but stable aftermarket, could be a candidate for some kind of future segmentation. Highly speculative, but based on observable strategy.
Okay, so wrapping things up. Nordson's Q3, strong operational execution, beat expectations, really impressive cash flow.
Absolutely. The Atrium integration looks great, ahead of schedule, and they're continuing to strategically shape the portfolio with the CDMO sale. It positions them well.
Yeah, even though they're navigating some choppy waters in certain industrial markets, that strength in advanced technology solutions, especially with the AI tailwind, is a powerful driver.
It really is a significant growth engine for them right now. And that commitment to returning capital with the big new buyback plan, it definitely signals management confidence. Focus is clearly on shareholder value.
Well, we hope this deep dive gave you some valuable insights into Nordson's latest quarter and their strategic direction. Remember, knowledge is powerful.
But use it wisely. Do your own homework before making any investment decisions.
Definitely. Thanks for tuning in.
Yeah, thank you for joining us for this deep dive. We appreciate you listening, and we'll catch you on the next one.